Hello, traders. FX Pip Collector here. Today is Saturday, August 24th, and this is my Saturday video I like to do where I go over all the pairs that I do watch, which basically includes all the major Forex pairs, including gold. I also do cover oil, I cover natural gas, I cover the S&P 500, the Nasdaq 100, and the US 30. Now, these are the pairs that I look for trades on live with my members every single day during the daily Zoom meetings that I do. If anybody is interested in joining my membership, then the link for that is in the description of this video. It is only $30 a month. I keep it extremely cheap because I definitely want it to be affordable, and I am looking to get rich for my trading, not for my membership, unlike a lot of people on YouTube. Now, this also comes with a trading course video, which is about 35 videos long, about 7.5 hours of content. And it also comes with the daily Zoom meetings. Every single weekday, I do a Zoom meeting, a live stream for the New York session every Monday, Tuesday, Wednesday, Thursday, and Friday. And it's usually up to 2 hours long, starting at 1 p.m. UK time or 8 a.m. Eastern Standard Time, like New York time. And this is live trading, live analysis, and really the main purpose of this is to teach. But we also, if there's a trade during this time, which during the New York session there often is trades, then we will take trades together in the group together. And that's why I like to call it learn and earn at the same time, because hopefully while you're learning by following along with my trading course and attending my daily Zoom meetings, hopefully you will be earning by following along with my trade setups. Every single swing trade setup that I take, I share with the group at the time of entry with stop loss and a scaling out program for the take profits. So definitely check it out. It is only $30 a month, and you can cancel at any time. But I am pretty confident you'll be pretty satisfied because, boy, it wouldn't take too many winning trades to make $30 a month just to cover your membership. I have a lot of people in the group that say that they only pay me $30 a month and they make several $1,000s a month on their funded trading accounts. So definitely worth the money. Check it out. So anyways, let's start off at the bottom here. We'll start off at the indices, work our way up on the list, work our way all the way up to probably the more popular, the US dollar pairs. And we're gonna do the daily time frame because for me the daily time frame is the roadmap time frame. If you understand what to do, if you understand your roadmap time frame, then you can basically just go down to the sort of time frames and just trade in the direction that your roadmap time frame tells you to trade in. Now I do only trade in one direction and I am only a swing trader, so I'm not ever looking at any of the very short time frames. You'll notice I don't even have any of the short time frames on my chart. I don't even have anything below the 15-minute on my chart. I am definitely a swing trader. I'm not a scalper, and I'm not even really too much of a day trader. So, anyways, let's start off at the US 30 and work our way up. So on the US 30, I definitely think this is an ABC correction right here, and I think we're back into the uptrend. Now, if you actually look at the very high time frames, the monthly time frame, my next target is the 78% Fibonacci extension, which is right around the 43,300 area. So the trend is up. I'm definitely looking for longs on shorter time frames, and I definitely only am going to be going long on pullbacks on shorter time frames. Pretty much all three of the indices are the same. I mean, I think that a couple of weeks ago we ended a big ABC correction. We made another higher low, and I think we're back into the uptrend. I think this will take out the previous highs. I mean, my conservative target would probably be the 21,076 area, but it potentially could go a lot higher than that. So I'm definitely looking for longs on pullbacks on that into the week coming. S&P 500 is actually quite a bit stronger than some of the other two indices. Definitely looks like a 1-2-3 pattern, an ABC correction. Nice higher low, nice higher low. This ABC correction was only a correction to this last 5 waves up right here. Now, my target on this one, if you actually go up to the weekly, monthly time frame, is the 161% Fibonacci extension of wave 1 projected out the bottom of wave 2, which puts us up at the $5,900 area. So definitely still pretty bullish. The $5,900 area is still a long ways up there since we're only at right around 5,600 right now. So I will definitely be looking for longs coming into the week ahead. Moving on to natural gas. Now, natural gas just recently, well, this is the daily time frame, so like 2 weeks ago, just broke structure to the upside. Normally, these are what I call the bread and butter trades. These are the trades that are going to put bread and butter on your table. These are probably the safest, most reliable trades. Break of structure, 1, 2, 3 pullback, Fibonacci level, engulfing move to the upside on shorter time frames. This is definitely a trade that I'm watching very closely. Probably the first few days of the week, I think there's a good chance that we will bounce from one of these fib levels and make an impulsive move up. I think there's a good chance it could be a 1, 2, 3, but in these circumstances, I always label it as either an A or a 1, a B or a 2, and then it goes up for either a 3, which would be a big old trend, or possibly a C, which would still be a big trend, but a wave C potentially would only go maybe like that high compared to a wave 3 would go up and take out the previous highs. So definitely keeping a close eye on that. Oil is another one we should probably pay very close attention to because we just broke structure on Friday. And this looks to me like a 1, 2, 3, 4, 5 waves down for a wave C. 1, 2, 3, 4, 5 waves down for wave A. 1, 2, 3 waves up wave B. I think we have an ABC correction right here, and I think it's an ABC of B. My target on oil is right around $100 a barrel, which is so high that you can't even see it on this chart. And that's potentially going to take months for it to get there. There's going to be lots of pullbacks on these sort of time frames, but definitely, now that we have a breaker structure, I definitely am looking for pullback entries to go long on shorter time frames. Moving on to gold, dollar pairs have been awesome lately for trend traders. Anybody that's counter trend trading has probably been getting beat up big time lately. Me as a trend trader, this is awesome trading conditions in the dollar pairs. My target for gold is still the 161.8, which is right above the 2550 area, like 2560, 2550. We're definitely getting close. I mean, we're at the 2500 area right now, so I think this 61.8 right around 2550, 2560 would be the best conservative target. I think there's a very good chance that it's going to make its way up there, so I definitely will continue to look for longs on shorter time frames. I do think it is a wave 5, end of a wave 4, 1, 2, 3, 4, and most likely 1, 2, 3, 4, 5 of wave 5. So I think we are in a wave 5 of wave 5, but this is all still a wave 3 on the monthly time frames. So likely a wave 5 of wave 3. Moving on to the Swiss pairs, the CAD Swiss first of all. Now, the CADs, all the Swiss pairs, we don't really know whether this move down is a correction to the move up or not, but we will be able to recognize it if it is. We have a Fibonacci retracement on here. If it makes 1, 2, 3 waves down to a Fibonacci level, then a very engulfing move to the upside, and obviously it's a correction to this move up, and obviously we need to start looking for longs. Right now, I would still be looking for shorts, because even if it's not a correction, possibly it's not a correction, possibly it's just going to keep on trending down. So either way, even if it is a correction though, we should still get a couple pretty good shorting opportunities before it does prove to be a correction and make a big move to the upside. So moving on to the Kiwi Swiss. The Kiwi Swiss is very strong because of the Kiwi. Ever since we broke structure to the upside, I would have definitely been looking for longs, and there's definitely been some amazing longs over the last couple of weeks on this thing. If this really is a wave 5 down here, then it will eventually take out the high of wave 4. So potentially, we will be looking for longs for probably the next several weeks on this one. Moving on to the Kiwi CAD. The Kiwi has been very strong lately. I think the Kiwi CAD ended an ABC correction several weeks ago. And really, ever since it started making higher highs, higher lows, I mean, higher high, higher low, higher high, higher low, you should definitely be looking for longs. Most recent structure level is right here, so as long as it doesn't go down and break that structure, I will definitely would continue to look for longs on shorter time frames. Moving on to the Aussie Kiwi. I think the Aussie Kiwi just ended a correction this week. I think this is 1, 2, 3, 4, 5 waves down. First of all, I think this is the end of a wave W on like the weekly monthly. And then 5 waves down, most likely a 1. I think we got 1, 2, 3 waves up right here, most likely a 2. And we're very likely now going down in a wave 3, which potentially will last several months. So this should be a really good one to continue to look for shorts on. Moving on to the Aussie Swiss, just like all the other Swiss pairs, I do think it is going to go down again. Whether or not it's a correction to this move up, I think is the question. Some of the Swiss pairs definitely look like they could just keep on trending down and potentially make it a new low. A lot of the Swiss pairs look like they might have made 1, 2, 3 waves down, potentially a 3-3 pattern on the weekly monthly time frame. If that's the case, and this really is a wave C, which is starting to look more and more like it is, then it will eventually take out these highs. But on a more shorter term basis, I do think it needs to go down to one of these these lower Fibonacci levels before it potentially does make another move to the upside. And while we're looking for shorts on shorter time frames, if it just keeps on drifting down, then that's going to be great news for us because it's going to be like a bonus trade. If we're looking for shorts and we expect it to be an ABC crescent to the uptrend, but instead it just keeps on going down, that's like a bonus trade for me. Instead of making good profit, I would make amazing profit by being wrong about my Elliot wave count. So moving on to the Aussie CAD. The Aussie CAD I think also is going up pretty strong. I think we ended a big expanding flat, A, B, C, A, 1, 2, 3, B, 1, 2, 3, 4, 5, C. So I think that is definitely an expanding flat. Higher high wave B, lower low wave C. I think this is definitely going to go up and take out these highs and probably potentially be in an uptrend for a very long time. So we potentially will be looking for longs on this for a very long time also. Moving on to the pound Kiwi. Let me zoom out a little bit on this one because the pound Kiwi, the pound Aussie, the Euro Kiwi, the Euro Aussie are all very, very correlated. And they all made 1, 2, 3 waves down, 1, 2, 3 waves down. Some of them are a little bit clearer than others. This one is not the most clear, but it definitely does look like a double 3 pattern. So if it is a double 3 pattern, then that means we're either going to make 1, 2, 3 waves down for a WXY, or we're going to make 1, 2, 3, 4, 5 waves down for a flat. Either scenario, it does kind of seem like that we potentially are going to make a big move to the downside. If it's a WXY, then there's potentially going to be a big crescent in the middle someplace. Maybe even something like that before it goes down. But either scenario, we should probably be looking for shorts on shorter time frames. And if you look at the pound Aussie, it's the same exact story. We got 1, 2, 3 waves down, 1, 2, 3 waves up. It looks like a double 3 pattern, and like I said, it's either now going to make 1, 2, 3 waves down for a WXY, or potentially it's going to make 1, 2, 3, 4, 5 waves down for a flat. A flat is a 335, a WXY is a 333. So that's the difference between that. Definitely will be looking for shorts on that. Pound Swiss, the pound has actually been quite strong. Just like all the other Swiss pairs, we don't really know whether this is really the end of a wave D or not. It potentially could just keep on going down, making new lows. If it is a crescent, then most likely it would make 3 waves down to one of these Fibonacci retracement levels with a nice big impulsive move up that we should be able to recognize. And if it does do that, then we definitely would stop looking for shorts and start looking for longs again. But either scenario, I feel like it might pop up a little more, take out the highs, but I do think there's a good chance that it's going to go down, at least make a crescent test move up, or maybe just keep on going down. And just like the other Swiss pairs, if it keeps on going down, it's definitely not going to affect me in any negative way. The pound CAD, yeah, definitely in an uptrend. The pound CAD has made a couple pretty tricky crescents because these are very, very impulsive crescents. Both of these are very impulsive. I think what happened here is that these are motive wave crescents. But either way, I mean, the trend is up, and if you look at the very high time frames, I have a really high target on these things. So potentially, we are in a uptrend that potentially could last months and months and months. There's going to be lots of pullbacks along the way, which is great news for us because that should give us chances to go long again. So I think the Euro Kiwi has actually kind of confirmed this 3-3 pattern, just like the pound Kiwi and pound Aussie. 1, 2, 3 waves down, 1, 2, 3 waves up. Now we either going to make 1, 2, 3, 4, 5 waves down, which will take out the lows, or we're going to make 1, 2, 3 waves down, which will take out the lows. Either scenario, we should be looking for shorts on shorter time frames, I believe. The Euro Aussie is starting to break structure to the downside, which I think is going to help confirm this 3-3 pattern. 1, 2, 3 waves down, 1, 2, 3 waves up. I think that we're just like the other ones. We're either going to make 1, 2, 3, 4, 5 waves down, taking out the low wave 4, or we're going to make 1, 2, 3 waves down, taking out the low wave 4. Either way, I think that we should be looking for shorts on shorter time frames. Moving on to the Euro Pound. Now, the Euro Pound made a very, very, very impulsive move up with breaks of structure, so I'm still looking at this move down as possibly being a crescent to this move up. I would pay very, very close attention to these Fibonacci levels. If it does like a double bottom, like break of structure, I would stop looking for longs and start looking for, I would stop looking for shorts and start looking for longs again. But right now, I'm definitely looking for shorts, and just kind of like the other pair I was talking about, while I'm looking for shorts, and I expect this to be a crescent, but if it just keeps on going down, and I'm wrong about this being a crescent to this move up right here, but I'm looking for shorts on shorter time frames, Is it going to affect me at all if I'm wrong while I'm looking for shorts? If anything, I'm going to make more money being wrong about the analysis. So that's why I like my trading strategy so much, because I use Elliott Wave as my main tool, but I just go with the flow. So if I'm wrong about my Elliott Wave count, oftentimes when I'm wrong about my Elliott Wave count, I make more money. Because if this really does, bounce from here and do this, then I'm going to still make money, but it's going to be less. If I'm wrong about my Elliott wave count and it just keeps on going down and I'm looking for shorts, I'm going to potentially make more money being wrong. So anyways, moving on to the Euro Swiss, just like the other Swiss pairs, I think we are very, very likely either in a correction to this move up, which would go down to a Fibonacci level, three ways down and positive up, which we definitely should be able to recognize, or potentially it's just going to keep on going down. This is another one of them circumstances where I suspect that it's probably more likely to make three ways down and pulsive up. But while I'm looking for shorts on shorter time frames, if it just keeps on making lower lows, lower highs, then that's actually going to make me more money being incorrect about my LE wave count. Definitely looking for shorts on shorter time frames. So the EURUSD, yeah, definitely looking for longs. We do not have a break of structure. The trend is definitely still up. Just like the pound CAD, I actually have a target that is way, way, way higher. I think potentially all the way up to like 1.62, 1.64 area. So I think potentially we could be looking for longs on a very long time. If the market proves me wrong, then I definitely will recognize that and I'll start looking for shorts again. But right now, definitely looking for longs in an uptrend. The yen pairs have been extremely overlapping for about 2 or 3 weeks now. Technically, in my eyes, the trend is still down, and it still kind of seems to me like it could make another attempt on a downtrend and still be part of a wave A of wave 4. At some point, we are definitely going to make a wave B, which a wave B would be correcting to the wave A, but until we actually break structure to the upside, I'm not really convinced that we are actually in that wave B. I would definitely still be looking for shorts on the Swiss yen. CAD yen, same type of thing. I mean, I would be looking for shorts, expecting something like this. But while I'm looking for shorts, if it makes three ways down to a fib level, makes a nice impulsive move up, makes a pick a structure, I should be able to recognize that as a correction to this, and I would get out of my shorts and reverse my positions and potentially go long, because that would probably tell us that we're already in a wave B. But like I said, I'm not really convinced of that. I think there's still a chance that it could make another attempt on the downtrend, and this is still a wave A of wave 4. All the yen pairs are extremely correlated, which is why I kind of cruise through them really fast. The Kiwi is still very strong, and technically, I mean, the trend is down on the daily, but man, until this thing actually breaks down like that, you probably should be looking for longs if you're trading like the 1 hour time frame range. So definitely looking for longs. I mean, if it breaks structure to the upside, that should confirm wave B. If it actually goes down and breaks structure to the downside, that should confirm that it's going down for another attempt on the wave A downtrend. So moving on to the Aussie yen, yeah, same thing as the other yen pairs. If it goes down in three waves, bounces from a fib level, then I'll definitely stop looking for shorts and start looking for longs. That would probably tell me it's a wave B. If it goes down and just keeps on going down like that, then it's still all part of a wave A of wave 4 on the higher time frames, which I still think is very likely, especially because we still don't have a breaker structure to the upside yet. So technically, the trend is definitely still down. So moving on to the pound yen, the pound is pretty strong to the upside also. I think it does need to make a push down, and that push down could be an ABC correction to the uptrend. Or that push down could be a continuation of the downtrend for the wave A. What do? We look for shorts, and while we're looking for shorts, if we put our Fibonacci retracement from here to here and it bounces from a fib level and makes a nice impulsive move up, then we'll stop looking for shorts and start looking for longs, probably for a wave B. So just go with the flow. Definitely just go with the flow. The yo yen, kind of the same thing. I mean, I suspect that it might go down and make another attempt on the downtrend for a wave A. If I'm wrong about that, then potentially it would make 1, 2, 3 waves down to a Fibonacci level and then a nice impulsive move up. And if that does happen, I will recognize it. I'll stop looking for shorts and I'll start looking for longs for the continuation of this wave B. I still suspect that it might go down and continue the wave A, but like I said, I do my best on Elliott wave analysis, and then I just go with the flow and I allow the market to tell me whether it agrees with my Elliott wave analysis or not. A lot of Elliott wave traders are really unsuccessful trading because they use Elliott wave, they force their analysis on the market. I do not force my analysis on the market. I put my analysis on the market, and then if the market agrees with my analysis, great. If it doesn't agree with my analysis, okay, then it's time to reanalyze. Go with the flow. The market's the only one that knows what's going to happen. So the US dollar yen, I still think this is either a wave A or a wave 1. I still think this is all just one downtrend. I still think it could be a wave 5 too. So, I think there could be a wave 1 and a wave 2 up here someplace. This is a wave 3, this is a wave 4, this is now in a wave 5 of either wave A or wave 1. I honestly don't care whether it's a wave A or a wave 1 because the trading strategy is exactly the same for a wave 1 or a wave A. The trading strategy is exactly the same for a wave 2 or a wave B. The only time that we're going to have to know the difference is when it starts a wave 3 or a wave C, which is going to be quite some time away. So moving on to the US dollar Swiss. US dollar Swiss is definitely still in a downtrend. There's no doubt about that. It kind of looks like it could be a wave 5, but potentially it could still be a subdivision of a much bigger downtrend, especially with my analysis on the US dollar index. I'm very, very bearish on the US dollar index, so this may not even be a wave 5. And this is another one of them circumstances where I think it's a wave 5. If it is a wave 5, it potentially would bounce break, starts proving it's a wave 5. But if I'm wrong about it being a wave 5 and it just keeps on trending down, then guess what? I'm going to be looking for shorts anyways. So what does it matter to me? I will continue to look for shorts until the market tells me otherwise. So US dollar CAD, man, this one's been a ripper this week, big time. If you actually go to the weekly, monthly time frame, I believe that this is going down for an ABC of wave B, which will take out the low of wave 4. So potentially this thing is going to be in a downtrend for a very long time. Now, at some point, I don't know when, at some point it probably will make some pretty significant pullbacks. I definitely wouldn't be trying to find any bottoms right here. I would definitely just continue to look for shorts. I mean, because this thing could easily just keep on doing that. I think at some point it's going to have to make a wave 1 and a wave 2, but until it actually proves the wave 1 is over, I would definitely continue to look for shorts. Moving on to the Kiwi. Like I said, the Kiwi is actually one of the strongest currencies right now, believe it or not. My target for the Kiwi is actually probably above the high of wave A, probably someplace around the 0.76 area. So very, 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 very bullish on the dollar pairs. Very, very, very bearish on the US dollar index for sure. So definitely, definitely going to be looking for longs, man. These dollar pairs, like I said at the beginning of this live video, anybody that is trying to counter trend trade the dollar pairs has been getting beat up tremendously over the last few weeks. I am a trend trader. These are the circumstances where I make a killing in the market. If you actually look at the trader sentiment for most of these dollar pairs, for the last several weeks, everybody's been trying to go short on these things, which tells me that 90% of traders are trying to go short, which means 90% of traders are losing money over these last couple of weeks. These are the type of circumstances where I just laugh my way to the bank because all I do is continue to look for longs. I'm not going to try to identify the top or the bottom of this move. The market will tell me when the move is over. I don't have to try to guess when it's over. You can definitely know when the market is done with a trend if you know how to tune the frequency of your time frames. So I am definitely, definitely still looking for longs in an uptrend. And we got 3 more pairs to look at. Before we look at those, I just want to remind you, I do have a membership program. It's at my website, FXPipCollector.com. It is only $30 a month. I share every single swing trade that I take with the group at the time of entry. I do a 2-hour live stream or a Zoom meeting every single day of the week, Monday, Tuesday, Wednesday, Thursday, Friday. And you also get a 35 video trading course, so that way you can understand my strategy, understand a little more about Elliot wave structure analysis, Fibonacci analysis, and just going with the flow. I really have 3 edges when it comes to my trading. I have Fibonacci analysis, I have structure analysis, and I have Elliott wave analysis. And then I just go with the flow and I allow the market to tell me whether my analysis is right or not. I do not get married to my analysis, and I do not force my analysis onto the market. So the Aussie dollar, yeah, I mean, this is another one, man. Anybody that's been trying to counter trend trade this thing has just been getting beat up big time. I think this is the end of a trend right here. I think this is a wave 1, a wave 2. I think we're in a wave 3. At some point, we're going to have to make a bigger correction for the wave 2 of wave 3, but yeah, definitely wave 3. My target for this is above the wave W, probably someplace around the 0.82, maybe 0.81 area. So, potentially it could take a year or so for it to get up there, but yeah, there's going to be lots of pullbacks along the way, which is great news for us because we will continue to look for longs and an uptrend. At some point, it's going to have to make a bigger pullback for wave two, but it doesn't have to do that now. I mean, it could potentially go up and make a wave two way up here. The market will tell us when it's time to make a wave two. Most wave twos do happen someplace around the highs of the wave B or the high of the previous trend. So at some point, probably in the near future, maybe in the next week or two, it probably will make a more significant pullback. But for now, I am definitely looking for longs in an uptrend. Moving on to the pound dollar, same type of thing. If you actually look at the monthly time frame, my target for the pound dollar is actually right around the 1.47 area, maybe 1.47 area. And we are currently only at the 1.32. So I mean, I am extremely bullish on the dollar pairs, extremely bearish on the dollar. The trend is your friend, especially when you're in a wave three. This is a wave one. This is a wave two. We're in a wave three. Wave threes are supposed to be the biggest, strongest wave of a trend. So trying to go short against a wave three is just going to cause you to lose all kinds of money. Trading with the trend and getting in on pullback entries is going to cause you to make all kinds of money in these markets. Moving on to the euro dollar, just like the other dollar pairs, I'm very, very, very bullish. I think there's a very good chance that this is an expanding flat. I personally think it's going to go up to probably around 1.30. It could go a little lower, possibly 1.26, but either one of those targets is extremely long ways away. We're only at the 1.19 right now, so extremely, extremely bullish. I do think that this right here is a wave one. I do think this is a wave two. I think we're in a wave three. This is a subdivision right here, wave one. This is a subdivision, wave two. And we're in a wave three of this one, two. And then we also have a wave one right here and a wave two right here. We are literally in a third degree wave three right now. And if you understand anything about Elliott wave, you know what I mean. Because this is a one, two, three. So this is a one, two, three. And then we are also in a one, two, three right there. So that's the second wave three. And now we're in a one, two, three right there. This is a third degree wave three. We're in a wave three of wave three of wave three. Wave three is supposed to be the strongest wave of a trend. So trying to sort a wave three, wave three, wave three is just a recipe to lose all your money. So if you want to try to sort this thing, definitely go for it. I definitely wouldn't be sorting it. I definitely would be looking for longs on shorter time frames. The trend is your friend. I've really been trying to emphasize in my videos lately that the trend is your friend because I know we're in a wave three, and I really do not like seeing people lose money in these markets. And all I had to do is look at the trader sentiment and see that 90% of people for the last, it's actually retail traders, so 90% of retail traders have been trying to sort the euro dollar, the pound dollar, the Aussie dollar, the Kiwi dollar, trying to go long the dollar CAD over the last several weeks. 90 plus percent of people have been trying to counter trend trade this, which tells me that pretty much all of those people are just losing their asses in these markets. They're just like losing so much money. The trend is your friend. We are in a third degree wave three. Do not try to fight this wave three. Trade with the trend. So, anyways, I hope everybody enjoys the rest of their weekend. And as always, happy trading and good luck to everybody with the week to come.